Hi guys, Brad Verma here. Welcome to this episode of the Real Estate Market Update. I wanted to share with you a little bit about how the real estate market is doing in January 2021 and also a little bit about the overall economy. So, first of all, wish you all a very happy new year. Hope you have a prosperous new year, very healthy new year. It's been really tough this last year for a lot of folks, and I just wish you good health and peace of mind in 2021. So, with that, let's get started. I want to share with you first a little bit about the overall economy, how things are going um, overall in the US as well as in the Bay Area. And then I want to dive a little bit deeper into how we're doing in terms of the housing market in California, and then also specifically on in the Bay Area itself. Um, and I have some lot of good news to share, so hang in there. So let's first start with the overall economy, and I'm going to be sharing some slides. So would love to get your feedback. If you have any questions, feel free to ask me, and I can provide more detail about any of those slides out here. All right. So as you can see, this is giving you an overall picture of how the retail sales are going. And as retail sales is a huge indicator of how the economy is doing overall. And very happy to see that V-shaped curve that you see right here. We had a huge dip so you can see in January we were right here. Just change the color. So in January we were right here, and then we took a huge dip in March and April. And then we kind of started going up. And right now, we've had this upward trend, and it's really recovered more than what we were um, last year. So, US retail sales have really gone up quite a bit. So, we are almost over $550 billion on a monthly basis out here. So, so that's really good news uh, to see that the housing, the consumers have the confidence in the economy, and there's a lot of spending going on right now, and that's really good for the overall economy and the outlook for not only 2021 but also beyond. Okay, so this slide talks about the Bay Area has been in the middle of the pack economically. And what this basically shows is that we have, had some job losses, um, but we have recovered most of them through November of 2020. This chart basically just covers everything through November 2020. And the good news is, we've gotten most of the jobs back, but there is still a lot of jobs that are still um, not, they haven't, been able to come back to work. As we all know, we are still in, shutdown mode in a lot of sectors, and it's really impacted a lot of the industries, especially the restaurant industry, um, some of the retail stores. So it's going to take a while for those sectors to recover. Hopefully, with the vaccine coming up, it's going to really help. So right now we're looking at Monterey County kind of got 11.3%. We're looking at Santa Cruz 5.8% back, so it lost a lot of jobs, and then only 5.8% back. And then the South Bay, we have about almost a little bit over 5%, 50% came back on. So we had job loss of 13%, and then 7.5% came back on. So it's good news. We haven't recovered totally, but we are on on the path to recovery. So let's talk about rates. Rates really determine a lot on the housing market front, and we are at historic low rates. And this really has helped tremendously for a lot of the home buyers. There's a huge demand for first-time home buyers looking to buy houses because rates are so affordable. And right now we're looking at rates as low as 2.5%, even lower than that. And in some cases, you can get even below 2%, depending on your credit history and what kind of terms you use. So I don't think I've ever seen rates this low in the last 20 years that I've been in real estate. And it's just amazing that we have that. And it's a great opportunity for people to buy a home and lock in that rate for 30 years. So as you can see, I mean, just this data starts from 1971 right here. And we are basically, at about 6% or so, and then it goes up and then all the way down. It goes all the way up to 18% or so. That's in 1981, 82. And then it goes all the way down. And as you can see, the trend has been that it's been going down. But never have we seen this kind of low interest rates right here at 2.5 in that range. It's just crazy, which is great in a lot of ways where people are able to afford so much more with those rates. Okay, this slide talks about sales have rebounded to the highest level in 15 years. And, as of December 2020, sales, there were about 509,000 units that were sold. And that is basically a 3.5% year-to-date increase and 28% year-to-year increase and 0.2% month-to-month increase. So that's a really important number to look at. 3.5% is a huge increase year to date, and then we look at year to year, it's 28% increase, which is again a huge number year to year. Just from last year, we were actually 28% higher. So that's pretty significant, despite everything that we've gone through. With COVID, we are much higher than the previous year in 2019, which says a lot about the state of the housing market. Okay. And the month to month, just from the prior month, it's still increasing. So there is a lot of sales happening, and it's all being driven by the huge demand and low supply. Okay. So this slide talks about the California housing market, sales above 500,000, price above sales above 500,000, sales above 700,000, supply lowest in years. So as you can see, average price has gone up to 717,000 in California, which is a 16% increase year to year. And then the unsold inventory index, 1.3 months, which is just really, really low. I mean, usually we have inventory of over 2 to 3 months in the previous years, and right now we are at 1.3 months of inventory, which is really low inventory, and that's why houses are moving so fast. And median days on the market is 11 days. So compared to 2019, we are 60% less. And then for the inventory, we were 48% lower. Okay. And the sales price to list price ratio, we are actually seeing a higher sales price compared to the list price by 0.1%. And year to year, that number has changed. It's gone up 1.9%. So all these indicators are really good. We are seeing an increase in the average price. We are seeing the inventory is less, which is really good for sellers. The houses are moving really fast, and then the median days on the market has gone down considerably. So it's about 10, 11 days. I had a sale just a few weeks back in Menlo Park, and we were getting offers even before we put it on the market, and we were able to sell before we actually put it on the market because there was such a huge demand and at a great price. So so all really great indicators for a strong housing market. Okay, this is focused more on the Bay Area, December 2020 Bay Area housing market snapshot. And what this tells is that we have, again, existing home sales have gone up year to year. So as you can see the number, it's 40% more compared to 2019. And existing home price in the Bay Area has gone up 16%, which is again a huge increase compared to 2019. So the median price of a home in the Bay Area is $1,058,000. So again, unsold inventory index, 1.1 months, the lowest. And then the median days in the market, 13 days. And then the sales price to list price ratios of 101.9%. So really great, great stats for 2021 going forward. I think it's a very, very strong housing market. Okay, this is a really another important slide to look at California active listings by month. And as you can see, the active listings have dipped to the lowest level in 15 years. We are at a very low inventory right now, and it's because it's fueled by the strong demand for houses, and just these lower interest rates have gotten a huge surge of demand from buyers trying to take advantage of that and secure a house at those low interest rates. So very strong demand right now, lowest in 15 years, active listings dip. Okay. That's it, guys, for today. That was a quick snapshot about the housing market and also about the overall economy. And we have really good indicators going forward for 2021. Very strong demand for housing. There is retail sales have really shot up. So everything is looking really good. I don't see any huge issues, especially for housing right now. We don't have any kind of mortgage crisis that we had in 2008. So all the indicators are showing that we have a very strong 2021. If you have any questions, feel free to reach out to me. Again, this is Brad Verma, and you can reach me at 650-665-0894. I would love to help you with any questions that you have, either about buying or selling property. Take care. Bye now.